prices are climbing again as geopolitical tensions between the United States and Iran intensify. President Donald Trump has reaffirmed a strict Tuesday deadline, warning that the U.S. could strike Iranian infrastructure, including power plants and bridges, if Iran does not reopen the Strait of Hormuz. According to KUNC, the U.S. administration has repeated this warning as pressure builds over the vital shipping lane that carries nearly 20% of the world's oil supply. Energy markets reacted quickly. According to Reuters, Brent crude has surged to around $110 per barrel, while U.S. crude is trading above roughly $113. Traders are worried that any disruption in the Strait of Hormuz could restrict global oil supplies, which would push prices even higher. People are closely watching the situation. Some Americans support strong action against Iran, but others worry about economic consequences and the risk of a wider conflict. Online discussions show many investors focusing on market signals rather than headlines. One commenter wrote, "Watch the signals, not just the headlines," highlighting how traders often look at market movements before political statements. For average Americans, the biggest impact could be higher gasoline and transportation costs. According to KUNC, U.S. gas prices have already climbed close to $4 per gallon since tensions escalated earlier this year. When oil prices rise, it usually increases costs across the economy, from shipping to groceries, because fuel is a key input in many industries. Looking at historical trends helps explain the concern. During the early phase of the Russia-Ukraine conflict in 2022, global oil prices briefly surged above $120 per barrel due to supply fears. Analysts say if the Strait of Hormuz remains restricted or military action begins, oil prices could move towards similar levels again. So what should people consider doing? Experts suggest monitoring fuel prices, adjusting household budgets if transportation costs increase, and paying attention to energy and inflation data. For investors, it may be important to stay cautious because geopolitical events can cause rapid swings in energy markets. For now, the world is watching the Tuesday deadline. Whether the situation moves toward diplomacy or military action could shape not only oil prices, but the broader global economy in the weeks ahead.